You have gold, the risk-off hedge for volatility, acting like your everyday coin. Oh, I can't say that anymore. Like your poop coin. Sorry about that, Corbin CEO. My apologies, sir.
Back for another episode of The Weekly. I'm Graham Stone, joined by David Sensel, as usual. All right, so let's get into it. Bitcoin dropping again over the weekend to as low as $75,000. Recovering a little bit here as of the time of recording, which is 11:48 a.m. here in Japan. It's still evening in the US. And that is critical because also what happened just before or just as the markets closed over before the weekend was a historic crash in gold and silver and other precious metals, something like a gazillion sigma move or whatever. I believe it was actually 10. I don't know what that means. Yeah. 10 sigmas. 10. A lot of sigmas going on there. And silver crashed from, I think it was like over $110 per ounce to as low as like 70, shaving off something like $4 trillion in market cap, which is greater than the entire Bripto market cap, as they say. What's the market cap of Bitcoin these days? Around 1.5 trillion.
Probably less right now.
Current moves. Multiple Bitcoins lost in hours in the silver markets, which also saw record historic trading volume, sort of outpacing the trading volume on like any other exchange or like index. Gold also crashed. It was as high as $5,600 to now I think trading around $4,700. Even larger numbers involved market cap wise there. David, do you have those handy? It was like, was it 7 trillion?
Yeah, so 7 trillion wiped out
between the two of them.
Between the two in a single day. So this is some analysts have said that this is the worst single day losses for the two metals since 1921. So it's been a while since you've seen these kinds of moves. And I think in just raw terms, right, like number terms, it's insanely large. You have gold, the risk-off hedge for volatility, acting like your everyday coin. Oh, I can't say that anymore. Like your poop coin. Sorry about that, Corbin CEO. My apologies, sir. Video editors, bleep that out, please. You put a little poop emoji over my face. I would just like to pat myself on the back just a little bit here, because on Friday, before this historic move started, I wrote in my weekly newsletter something that I think came true a lot faster than I thought. But again, Graham is showing you this. I felt like gold was starting to act like a very volatile asset, like Bitcoin, like I don't know, some of these crypto coins. And so I wrote this newsletter, tongue-in-cheek, called "I'm the Volatile Asset Now," with this I thought funny AI-generated image of a bar of gold doing the "look at me" meme. And then, like hours later, it performed like Bitcoin, which is wild. Now, I just like to say that we were talking about this the pre-show. When a meme coin or a low liquidity, low market cap coin is very volatile, you go, oh yeah, of course, no problem. What's there to be? That's normal. But when you have one of the biggest assets in the world, the asset that supposedly is the risk-off hedge and has low volatility, the asset that the narrative will tell you every central bank and major institution is plowing into. When you have these big moves in the sizes that we're talking about, trillions of dollars, this is not to say the trade is over, but at the very, very, very least, you kind of have to take a step back and figure out what is going on. Because this is not driven, I don't think, by retail. Like the sizes are too big for that to happen, right? So what's happening? Like what is going on, right? So let's get into that. There are lots. Okay.
Is it Epstein?
Most definitely Epstein has something to do with it, I'm sure. I think his island was made out of gold. But here's a related, well, not related, but I think an equally ridiculous explanation, which some have pointed out, is U.S. President Donald Trump announced that Kevin Warsh will be the next federal chair. We'll talk about that briefly later. But many are saying that this is the proximate cause for gold and silver to sell off like that. I think that's patently ridiculous, right? And I'm not the only one. Gold bug Peter Schiff disagrees as well. He says, quote, "The crash in gold and silver today has nothing to do with Trump's nomination of Kevin Warsh for the Fed chair. If Trump thought Warsh was going to be a hawk, he would not have picked him." Others agree that Warsh's nomination had nothing to do with the move. Peter Hahn, a seasoned market analyst, stated that the unprecedented sell-off might be the result of a market manipulation scheme. So this is definitely not related to, or he believes this is also not related to the announcement.
Well, anyone in the gold bug circles will know of the many conspiracies relating to the suppression over decades of the price of gold, right? That this is like, it's basically taken as a truth, actually, isn't it? At this point, that the price of gold has been manipulated over decades.
I don't take it as truth. I think that's ridiculous, but that's just me.
It's a widely discussed talking point amongst like hard money advocates, especially gold bugs.
You know what that's called by everybody else? Cope. When the thing that you think is precious isn't responding in the way that you think it should be, you entertain cope to relieve your psychological anguish of reality not matching what you perceive the world to be.
Okay, well, continuing on the cope trend or cope theme, David, you seem to be suggesting that it's all over for gold here.
No.
And good riddance.
Oh,
basically.
No.
But could it just be a correction, just a natural market correction? I mean, look at this chart. Like, it's parabolic. We had a correction in October from 4,500 down to 3,800.
It
went even more parabolic. It looks kind of like a healthy correction, actually.
Yeah.
Chart wise.
No, I agree, but like I said, the difference is, like, remember, let's analogize this to just crypto, because I think it's a little easier to work with the numbers. When you see, like your meme coins on Pump.Fun do this kind of thing, you're like, oh yeah, it could like 10x from here, right? No problem.
Yeah.
But when you see Bitcoin do this kind of thing, right? Yeah. You're like, well, okay, so for it to 1x from, like we're just talking about Bitcoin, at $100,000 a Bitcoin, for it to 2x to 200,000, the amount of money that has to go into that is just kind of, it's not the same, right? Now we're talking about gold. We're talking about trillions of dollars, right?
Yeah.
So obviously, as the asset gets bigger and bigger, it just starts behaving differently, right? And then when you see like one of the biggest assets in the world start to have this kind of volatility, at the very least, that's all I'm saying. At the very least, you have to kind of be like, well, okay, this could be a correction and it could go up again. But think about the amount of money we're talking about, right? To make it go up again. And why suddenly did this kind of evaporate in like a couple hours? And you can't just write it off as like, oh, well, it's just acting like a poop coin. No. The amount of money involved makes it act differently, I think. It should make it act differently.
Okay,
at the very least.
I mean, why have precious metals gone parabolic over the last couple of months here, and why have they risen steadily over the last few years? People will say it's the debasement trade, it's the growing geopolitical uncertainty, the tendency for the U.S. dollar, the long-term trend of the U.S. dollar being less dominant. All of those factors are driving and maybe price valuations in equities are too high. These are all factors which are people point to for why precious metals have ripped. Okay, and then that narrative, all those narratives have combined to convince market participants that yes, this is the trade. So they all lever up. Everybody gets in the trade. It starts to go parabolic, and then somebody gets antsy and they sell. They're like, well, this move is overheated. Somebody does that. Somebody else does that. And then it cascades very quickly, right?
But
everybody's like, the smart money is like, I'm going to sell. And then you see these massive corrections. It finds equilibrium here. And then who knows what's going to happen next? It very well, all those narratives are still in play until they're not, right? Until suddenly, maybe like as we talk about a lot, right? Like narrative leads price leads narrative. Sorry. So now that the price is down, the narrative could shift. Oh no, gold's no longer the debasement trade. It's a volatile coin.
Yeah, but Graham, again, I think you're thinking of it. So you said someone sells. Who? Retail? Do they have enough money to move gold like this?
No, it's not retail. It's like some institution just looks at the chart. They got in, at $3,000 or like $4,000, let's say in October or whatever. Yeah. And they're like, this move has gone up too much too fast. Obviously, I'm going to take profits here. And then more people do that. And then all it takes is a few people to take profits.
Not people, players to take institutions.
Profits. Institutions, big players to take profits. And then it starts to slip. And then all the other like algorithms and like stop losses get like triggered. And it goes, you get these correction, right?
Yeah, correction.
I think this correction, though, it does have run the risk of like ruining the narrative that precious metals are like the way to go, because people get burnt, and then it's like, well, and then people start pointing out all the charts. Look at what happened the other times in the 80s and whatever, like the other precious metal bubbles. You saw these parabolic moves, and then you had like a decade long bear market.
Yeah, I mean, I think you need to. I think language here actually is important, because you're not talking about. I just don't see retail having that much of an effect on this.
I'm not saying they are.
And so, well, the point is that the people who probably caused, not the people. See, there I did it. The players that probably precipitated this. Well, they're organizations. It's like multiple. It's like not one person who's like sell. Anyway, these players, sophisticated players, I just wonder, is this like a classic flush, take profits, and then let the price run up again by people who want to buy the dip and kind of push it up again? My worry, or the thing that I would be cautious about, is so they just triggered this massive thing. So then they let it run up again a little bit, and then they sell more, right? Because they're still massively in profit, right? Like, exactly. And the thing is,
or they're buying back in at these lower levels, right? They get the smart money sells near the top, that starts the cascade.
But
now that the smart money has dry powder, if they're still like bullish on the narrative, that like the debasement trade narrative or whatever, then now they see, okay, the correction has been made. It's less over its skis now. I'm going to redeploy that capital. And
but who has the liquidity to? So if you're talking about an institution,
the institutions who just sold the top.
No. Who has the capital to buy the amount of money the institutions have? You think it's retail?
I'm saying the institutions sold the top.
I get what you're saying, but this is what I'm saying is, so the institutions, they just made a butt ton of money, okay?
Yeah, exactly.
And they want to put that money into the market.
Yeah.
Who's going to buy this? The other institutions are the only ones who have the capital to absorb.
The institute buy what?
So someone has sell the gold to the institutions.
Well, that's
Do you know
why
what I'm
the
talking
price
about?
could easily bounce right back.
Yeah, but then why would the institutions buy into thin liquidity?
Well, some will. Like, so if someone sold the Pico top and they just saw, like, okay, this is a technical chance to sell, okay? But they're still secularly bullish on the trend, right? The narrative, okay? Now it's the price is more reasonable. So some participants can buy back in at this price. And because, as you say, there might not be that many, there's less people willing to sell. It can cause the bounce to be significant.
Yeah, but okay, so let's look at it in Bitcoin terms, because I think that makes it clearer. Let's say an institution wanted to put $1 trillion into Bitcoin. They could do that. It would make the price retarded, though, and it wouldn't work. And they would never do anything as stupid. Gold is kind of like that. Like, the people who are going to, if the institutions are the ones with the biggest amount of money, trillions of dollars or whatever, and they want to buy gold, but they're the ones who have all the gold to begin with, right? The retail is going to be a smaller section of that. Then other institutions would basically be selling to other institutions, and then I think institutions would be happy to do that. Is what I'm saying. Is they're like, yeah, please buy my gold, because they want to get out, maybe, right? That's what I don't know. But I wonder if they're just going to slowly bleed out this thing. Anyway, I'm not trying to be doom and gloom here, but I would be, at the very least, I think you have to be cautious to see what happens, right?
Of course. But clearly, the run up in precious metals over the last couple of weeks was getting out of hand.
Overheated,
now,
for sure.
Was that the euphoric Pico top? Still unclear. It all depends. That's why what it really it depends what happens here on Monday. Do we and does the narrative shift?
Yeah.
Is it that was what were we thinking? There's not really a debasement trade. There's not really geopolitical uncertainty. Things are okay. All the reasons people were like talking about buying precious metals or supply crunch and blah blah blah. There's those paper claims on all the precious metals. All of those things have to sort of disappear now for this thing for it to be over.
Yeah.
It could easily come roaring back. That's what I'm saying.
Well, I see. That's where I think. Again, I'm not smart enough to know this. That's where I think this is not a narrative, potentially. It's like, it reminds me of like when Bitcoin in the 21, 22, it got to a certain price, and then just there wasn't enough liquidity in the entire system to push it higher. It just wasn't there. And it didn't matter if the narrative was whatever. It just didn't matter. There was not enough liquidity to make the price of Bitcoin go higher, because that was as high as any retail person could get it. That was it. There was nothing else. There was no juice left in the thing. And you look at the market cap of gold. I mean, the amount of run up in this is still massive. And then I think all retail combined, every retail person that has money to spend, if they plowed into it, I mean, is it $1 trillion worth of demand? I mean, I don't know. I don't think so. I don't know. It just seems...
Yeah, well, I will say that you do hear a lot of people. I have heard a lot of people over the last few weeks saying they missed the gold trade, but they think the narrative is strong, so they're waiting for a major pullback. And so you could imagine that those people might deploy here. Okay,
exactly. And institutions sell it to them.
Yeah.
They sell it into like thin liquidity, right? Thinning
we saw
liquidity.
We saw a blow off top in gold in October. and it sold off like kind of a very similar amount relatively, and then we have a second blow off top. So is there a third?
Yeah. Again, like with Bitcoin, like corrections are normal, right?
Yeah.
In a bull run, you have a 20-30% correction is normal until it reaches a point where there's just no more liquidity left to push it higher, right?
Yeah.
I don't know where that is, but when you have 7 trillion annihilated in one day, even for an asset like gold, that's a lot of money, or that's a lot of market cap,
Yeah. Well, as we know, though, that's not actually the amount of money. That's just the theoretical market cap.
I agree.
Right?
I agree. But again, this goes to things that I've been reading for the past couple of weeks, like who is buying gold, who has been buying gold, and buying it enough to meaningfully increase the price, right? Yeah, I mean, it's not central banks. First of all, a lot of people have saying that. No,
it's not really.
No.
Yes, I've heard this as well.
No,
it's marginally. Some central banks are buying have been buying a bit more, but we don't know the most recent data. We know like 6 months ago.
So there is I wrote about this in the newsletter, I think. Last week, this was all over the timeline. It was so infuriating. For the first time ever, central banks hold more gold than they do treasuries. This is the end. And then you look into the data, and 90+% of that is just the gold that they have. They haven't bought any really new gold. 90% of that change is just the price of gold rising, right?
Yeah.
So the banks aren't really going out buying more gold, and they aren't selling treasuries. It's just that the price has changed, you know?
Yeah.
So the central banks aren't like the marginal buyer.
Yeah. Either way, it's the reason we're talking about this. It relates to Bitcoin, this whole thing. Like, why? What we're seeing happening in the precious metals markets is historic. It's people are questioning the system, right? There's a lot of uncertainty, and that's what's driving this insane volatility. And for weeks, people have been saying that that the fact that it's not like moving Bitcoin in the way that silver and gold are being moved is an indication that Bitcoin has failed here, right? But I think just the fact that this craziness is happening, Bitcoin will eventually benefit from this, is how I see it. Or at the very least, it's relevant, right? These crazy moves, right now, they're expressing themselves in precious metals, but the underlying rationale for them is this like deterioration of the status quo. And we know that Bitcoin sort of, that's what it's built for, as to be outside of the system. Yeah.
I mean, I
an alternative.
I question that narrative. That I just feel like that it's aided a lot of people, for good reason, hate the dollar, and they hate the dollar system, and they think gold is the antidote to that. But then when you see gold act like this, like a kind of crazy volatile thing, and everyone piles into it, and that to me makes me question, at least in the short term, like what's going on here, right? So what, like we started at the top of the show, I think Monday morning in the U.S. is going to be a very key moment, I think, for this. Like, so because of the amount of market cap lost here, you could imagine this being something like 10/10 was for crypto, October 10th, where, of course, it's normal for retail to get fleeced and lose all their money during
of course
market events, right? But what happened in 10/10 in crypto was that the so-called smart money, they lost their shirts, right? And pretty much everyone agrees that crypto still hasn't recovered from that. It seems kind of amorphous why. We don't really know why, but it seems clear that it still hasn't recovered, right? You can see it in lots of graphs and data. The question, I think, is, did some major smart money, market makers, banks, hedge funds, did they get liquidated on this or margin called or whatever, compromised in such a massive move? And if they did, will they have to start like selling assets on Monday to meet those margin calls? That's, to me, the question.
All right,
And
well, we'll find out soon.
yeah, we'll find out soon. Now, obviously, we can switch to Bitcoin now. Bitcoin had a pretty rough weekend. Thursday, Friday, Bitcoin collapsed through the kind of 88,000, 90,000 level. It was kind of going around for a couple weeks, and it nosedived over the weekend into the upper 70s. It reached its lowest price since April of last year, going down. On Saturday alone, you had your kind of classic liquidation-driven flush. 1.14 billion in leverage positions was wiped out in 1 hour. And over the 24 hours, there's about 2.5 billion wiped out so far. And here we are Sunday night going into Monday morning. Obviously, if the markets react to this gold move negatively, I think Bitcoin will follow. And I think this could be the case where, let's say the markets react negatively. I'd imagine they react negatively because organizations, institutions are trying to raise capital to meet margin calls, and they'll sell off their Bitcoin positions as well to do that. So I mean, you could see this kind of go down a bit more. That's like the negative outcome. Positive outcome, markets rebound. The question here, Graham, is, let's say markets go up. Does Bitcoin go up too, or does it still continue with this decoupling where the markets respond positively? You see like equities and gold metals go up. Does Bitcoin just kind of linger down still?
Yeah, that's the question. Eventually, my feeling is that we're getting close to a bottom here on Bitcoin, and people are going to start to see the value.
Why is it just a hunch, or do you want to point to anything for that?
Well, technically, it's getting close to that 200-week simple average. There's been a lot of FUD. You see more and more people just dunking on Bitcoin. Just all of those factors start to add up to kind of a bottom.
Yeah. When have you deployed any dry powder yet, or are you still waiting?
I did at higher levels, and now I'm starting to look carefully.
Yep. It's I mean, I agree with you. I think we're starting to get to, what is it, 74.3 thousand. So yeah, we're getting to the point where we're going, like, we could get to quite low levels. So I think it is looking good. But I mean, dude, it's it's going down. Do you want to go through some of these reasons why maybe Bitcoin in the short term has gone down?
Sure.
Particularly?
Let's do it. So we have this excellent article from Jamie Redman. 3 reasons Bitcoin buckled as January closed, and they are institutional and minor sell-off. This one always kind of bothers me. Why did the price go down? Because people sold. Yeah. Okay. Sorry, Jamie.
No, but it's not people though. It's specifically institutions and miners, right? Like that's
okay.
driving.
Yeah. So I mean, miners they have to sell once because their inputs, the cost of obtaining Bitcoin is significant. They have to cover their costs, and it gets into this spiral, right? And so they just have to keep selling.
But
yeah.
The game for miners is like oil, though. The whole point of why miners and like oil people are the same is you make all your money during like 3-4 month bull runs in oil and in Bitcoin mining. My guess here is that miners have held for a lot of like 2025, and they didn't sell when they should have, like in October, November, and now they're kind of forced to sell at low prices because they're running out of money. So slight mismanagement, right? Like you don't want to sell at this price. That's the whole point. Miners really don't want to sell here, but I guess some are being forced to.
Yeah.
You want to sell. You want to sell when it's going up. Like when it's going up, that's when you're supposed to sell.
Yeah. It's buy low, sell high.
Yeah,
Sage advice.
Sage advice. Hard to do. Hard to do.
Beyond that, there's the Iran conflict, geopolitical tensions. Here, I think the thesis is that, like Bitcoin is, despite what people claim is the narrative, is that, it's like a geopolitical hedge. Actually, it's just a risk-off asset. So when you see geopolitical tensions and risk heightening, then Bitcoin's the first to sell off. I think that's the idea here with why U.S.-Iran conflict and geopolitical tensions would be a factor for Bitcoin's demise here over the last month or so, several months. And then, there's the Clarity Act, that thing looking increasingly not like it's going to get passed. And then we have the government shutdown, which the government shut down apparently in the U.S. again on, Friday? And it's unclear how long that'll happen. The last shutdown was like the longest ever.
Yeah.
Maybe.
Yep, it was. This will be longer still, my guess.
Okay, so we get a longer government shutdown. That can't be good. So people anticipating that, and so
a long government shutdown, it just delays the Clarity Acts. Even if you have like the most optimistic view of the Clarity Act, a government shutdown, obviously there's going to be zero progress with that, and so it just adds a little more uncertainty to whether Clarity is going to be passed anytime soon, thus preventing institutional capital to really like go into new institutional capital to come into crypto markets, because why would you do that when there's risk that there's not going to be clear regulation from Congress, not like from the president.
I think the Clarity Act doesn't really affect Bitcoin so much. It's more about crypto. Bitcoin already has decent regulatory clarity. Anyway. Yeah, should we move on to a little stablecoin talk?
This also ties into Bitcoin if you want. I mean, like the another one. This is a different article, but one thing that could be causing the price of Bitcoin to go down and crypto in general. By the way, I looked this up before we started the show. Bitcoin has gone down like as of right now like 14%, something like that, in the past like 3 days. If you look at the total market cap of crypto, excluding Bitcoin, it's gone down about 15%, which is surprising to me, right? Bitcoin and all other altcoins going down kind of the same amount. Yeah, usually you see alts go down significantly more. So,
yeah, I think that could be an indicator that could also be an indicator that we're near the bottom, because non-Bitcoin assets have already sold off so much they can only sell off basically at the rate that Bitcoin sells off at this point.
Yeah. So anyway, why might Bitcoin be going down and all crypto assets be going down? Stablecoin outflows, right? So Graham, you and I have talked about this for several years now. Stablecoin flows have been one of the better indicators of what's going to happen with price, or to explain why price is going up or down. And we've also talked about, especially for the past year, how this might have changed. Like this indicator might no longer might mean anything, because stablecoins have found actual product market fit, real utility, real adoption. And so you could have continuous inflows. You could have continuous stablecoin inflows, but those flows aren't actually going into buying anything. They're being used by companies, right?
For payments or like other infrastructure, basically.
Yeah, or DeFi, right? Just finding yield.
Just to hammer home that point, like there's other news here, right? That Mesh, for example, has hit unicorn status. Mesh is a crypto payments infrastructure platform. They just raised $75 million from Dragonfly and others, valuing the company at over $1 billion. So this is stablecoin based crypto payments infrastructure, right? Hitting real valuations and product market fit. And just another one, a little much smaller scale, I think, but it's very interesting still. Just like another country, right? The UAE, they've got their first stablecoin provider stablecoin provider infrastructure. There's this company called Universal, and basically it's like a US dollar backed stablecoin registered in the UAE as a foreign payment token. So what it means is that like when they conduct digital asset transactions in the UAE, this stablecoin, it can be like the settlement coin. So you don't have to necessarily settle into fiat. It's all regulated there. And so the growing stablecoin global payments infrastructure is ramping up, and therefore it's not all about trading. The stablecoins being the trading pair for Bitcoin and other crypto assets.
Yeah. Now, having said that, we've talked about this, I think, mostly on the positive inflows of stablecoins, right? But what we've seen is, for the first time in, I think, like a year or more, we've seen sizable stablecoin outflows for the past like two weeks. And so the question is, do these outflows indicate that market liquidity is exiting, right? Like net liquidity is exiting crypto? And my take on this is yes. I would say that this is the speculative, this is the trading liquidity, right? Like the stable coins that you just mentioned aren't leaving. But this stuff is
leaving, and then you're seeing that the outflows are minimal. But if you took out all the infrastructure and payments, product market fit use case of it, the outflows would be much greater.
Yeah.
Right. So it's kind of like buoyed up by the actual product market fit stuff. So probably a lot of people have cashed out, exited the crypto markets, moved back to fiat, bought precious metals, and hopefully got wrecked.
There's a little crypto vindictiveness there. The interesting thing is to modify what we were saying. I would say that basically this indicator maybe doesn't really work on positive inflows, right? You can't ascribe positive inflows to like then having positive price appreciation. However, when you have net negative flows, that probably still correlates reasonably well to price is going to go down or is going down, Yeah,
exactly.
So it doesn't really work to the upside, but it probably still indicates to the downside.
Yes, absolutely. So more pain coming. I think we've gone long here, David. Should we mention something about the Federal Reserve, formerly an institution that was relevant and drove markets?
Yeah, very briefly. Let's go. Like,
now,
2 minutes.
I don't know, some kind of drama that doesn't make it onto your feed because everything's dominated by Epstein.
Epstein and gold and silver. I mean, right, that's all I've seen for the past week.
Fed holds rates steady while two policymakers call for a cut. Okay, something happened. I The analysis I heard of this was that Jerome Powell just like stonewalled the press for 45 minutes in his speech and said nothing. Classic politician. When asked if he has any thoughts on like the absurd parabolic rise in precious metals, he replied, "Oh, that couldn't have anything to do. That couldn't possibly be affecting U.S. Treasury markets or dollar." Of course, he has to say that. Point is, they didn't. They held rates steady, and then also, we've got this news about whoever's going to be the new FOMC chair.
Yeah.
And,
well, this totally overshadowed the FOMC meeting, right? Like, I think the FOMC meeting was nothing compared to this, and then once gold and silver nuked on Friday into the weekend, that overshadowed this news. So Trump announced that the next chairman of the Federal Reserve will be Kevin Warsh. He served as a Fed Board of Governors from 2006 to 2011. Some view his nomination as possibly bearish for crypto, as he might promote monetary discipline and reduce liquidity. Markets seemingly didn't like this pick, although a lot of market participants, like sophisticated market participants, celebrated this as a great move, because Warsh apparently has all the credentials you would want. He's not. I mean, he's from business. He ran real money, unlike pretty much everyone in the Biden admin, who they were just like lifelong politicians, never having to be accountable for their decisions from a monetary standpoint, right? For running real money in a business. Imagine that. So also an interesting note, now both Besant and Warsh are Druckenmiller proteges. So you have basically the two people in charge, nominally in charge of the U.S. financial system, both kind of being taught and mentored by Stan Druckenmiller, who can be considered, is in the running for like best, smartest investor of all time. So it probably means that Besant and Warsh will be on the same page. They probably have the same way of looking at the world, and you'll see. You won't really see. I don't think you'll see any friction between those two in terms of what they want to do. Whereas I think you can see that between Besant and Powell. That'll be interesting to see what happens when he's in charge and they can basically do what they want.
All right, nice summary, David. Let's wrap it up there. I think we had quite an interesting discussion here. Can't wait to see what happens when markets open in the U.S. on Monday morning. Do precious metals recover or slide down and continue into a bear market for the next 2 decades, and Peter Schiff fades into irrelevancy?
Yeah, let's see. Let's see.
Let's see what happens. It all comes down to 6 hours from now or something.
All Monday, baby.
All right, have a great week, everyone. Thanks for listening. Catch you soon.